The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044. This is the Futures Hour. Here's your host, Larry Pesavento.
Good afternoon, folks. We're going to have Rich Anderson on at the break, at the half-hour break from Anderson Capital Management to talk about the grains and the meats. The first chart that I posted into Tiger TV today came from our good friend Mr. Z in Philadelphia. It's the long-term chart on hogs, and as you can see, they've tripled in price over the last 3 years. I guess Janet Yellen doesn't go to the supermarket very much. That's my guess, because here in Tucson, my best friend here is 91 years old, and he was married for 66 years. He lost his wife just a year ago, and he doesn't drive, so I do his marketing for him, and he told me to go over and pick him out a really nice T-bone steak. He said, find the best one you can. And so I did, and I almost fainted when I saw what the price of it was. I mean, I don't do any shopping. Sarah does all that. So when I saw what the price of that T-bone was, it was like $22 is a pound and a half or pound and a quarter, and it just shocked me. And then we look at fruits and vegetables and stuff. It's just amazing. Little red plums are $3.99 a pound, but I'm long red plums, so that's a good thing. Folks, we have a market that is breaking out and is getting ready to rip the shorts a new armpit, and it is a gold market. It has taken off, and I really think we are getting ready for something really, really big happening in gold. Yesterday's low in the gold was a perfect 61% retracement of the high from the 10-day run that we started in early June. We went up to 1285. We came down yesterday to 1258, which was the perfect ABC, or the perfect 61% retracement, and now gold has broken out. And to me, it looks like it's with a lot of gusto. We're having a pretty good wide-ranging day today, which is a good thing. So it looks like it has a possibility of having a really good run from this level. It really needs to get above. It's got to move about $60, $70 before the people really get interested in it. But from this level, you have to really be interested, because we took out the highs that we had during June, and we're almost ready to take the highs out in May, which come in at 317. Once we do that, you're going to be taking out monthly highs, and you'll get these long-term folks looking at this. But the fact that the Gartley that we made down here at the 1240 level has held, and it's really starting to look really, really interesting from a perspective of going higher. And the way the Fed is acting, they're going to be printing money forever, and so it looks like that's probably what is going to happen. Now, when we look at the gold, we really need to look at the gold and silver index. And by the way, the folks here at TFNN are really blessed, because there's no one any better at looking at these gold stocks than Tom O'Brien. I've known Tom for quite a while, and boy, he sure really knows the gold stocks like the back of his hand. We're going to take a look now at the XAU, which is the gold silver index. And as you can see, after we came off with that 786 retracement down at the 85 level, the low was 83.5. We're already up to the 61% retracement. Folks, we are taking out the March highs. I mean, gold's not even close to the May highs, but the XAU is taking out the March highs already. Now, that could be part of the fact that the stock market is so very strong, and people are buying gold and silver stocks also. But we gapped up today after a really strong day yesterday, and we're ready to assault the 108 level. We're trading at 98 right now. And believe me, this thing could really start moving because of the way that it came out of here with virtually no correction. In the last 22 days, we've only had one day, which was really 2 days ago, where the market backed off just a little bit and then even closed higher on the day. So it's had virtually no down move since the 28th of May. 28th of May, right around Memorial Day. So gold and silver are really beginning to raise their head to look like they want to to really do something. And to me, it looks really interesting. And what's good about this is the fact that we are starting to see little signs of open interest increasing, and also the volume started to pick up this last couple of days. So we need to watch that, because if we start seeing more buyers coming in, this is just the beginning of the move, and that's the thing that I think is really amazing with the potential that we have here. Now, the next chart that I want to put in here is the combination of both gold and silver, because this chart shows you how silver is acting stronger than gold for the first time in about a year. In other words, silver is really picking up the steam in here, and that's quite unusual, because usually gold leads the run, but this time it's silver that is running the show. We're up about 60 cents in silver today. And it looks really interesting anyway from the long side. From my opinion, we've got gold up quite a bit too. Gold just cracked the $1,300 per ounce level, up $27, and it certainly looks like it wants to go a lot higher from that perspective, as near as I can tell. But we are really moving in the grains. Silver has been up just about every day, either closed higher or made a higher high. Every day since Memorial Day, the 28th, and here we are, going to be the 20th. So for 3 straight weeks, we've had nothing but a straight-up move in silver. I know that's not going to, keep up, and we want to look for the place to buy it, but it really looks interesting here from a breakout standpoint. When it went above the $20 per ounce level today, it was really signaling that it wanted to go, and it took off right off the bat, without even batting an eye. And it didn't even back off yesterday when the Federal Reserve was coming in. Gold dropped down to the 61% retracement, and all silver could do was make a 382 retracement, spot on at $19.50 per ounce, and since that time it's up over $1 an ounce. So it's acting like it really wants to really move strongly to the upside. Folks, I don't know about inflation, but when you look at we already know that gasoline is expensive, and we already know that crude oil is expensive, and we've got corn near lows, and maybe it's going to go even lower, and wheat's very, very low. Soybeans are in the middle of a trading range, but boy, when you go to the supermarket, boy, they're not passing any of these savings on. I can certainly tell you that. It looks really, really interesting. We already know what's happening to cattle and hogs, and it's going to be quite some time before they ever, get that thing taken care of, because it takes so long for the gestation period in hogs and cattle in order to get, new crops and stuff, or a new crop of cattle and a new crop of hogs that come into the picture. Okay, we're going to take a quick look here at Christmas corn, because we've been waiting for a double bottom in here for, a couple of weeks now, and we actually got that double bottom yesterday. We came down within 1 cent of the actual low that we were looking at from January. Whether this is going to be the turn or not, I don't know, but it's up about 10 cents from where the market made its low. So we'll see if it's going to take a look at it. However, if we go below this low at 435, we could easily see 350 in corn, because we've planted a lot of corn, and evidently the orders are not nearly as good as they'd like to be from an exporter standpoint. But we should get one heck of a rally into this growing season that started, back in late May. And it's, corn is supposed to be as high as an elephant eye coming into July, but whether that's going to happen this year or not. I mean, it's gone from 517 down to 436. That's a huge drop in corn. That's $4,000 a contract, and we're only 10 cents off the bottom, which is very, very small amount. I mean, it's hardly moving at all from that perspective. I also wanted to bring up the wheat. If you'll give me a second here, I'll pull the wheat chart up, because we have a lot of symmetry in the wheat, and that's also offering a low risk entry point here for those of you that want to be a wheat farmer. Give me 1 second here so that I can get it all together. Well, I don't know if I'll ever get it all together, but maybe I can get this chart to work. That's the bottom line. Looks like it's not going to be in this lifetime. What did I do wrong now? Oh, dear. Hold on. Don't ever give an Italian a job. Oh, dear, I've got to do something. Hold on. I have to Oh, dear. Okay, where is it? It disappeared somewhere. There it is. I'll tell you, these computers are the bane of my existence. I had them crash on me today. And, oh, well. Okay, we're going to take a look at wheat here because it's very, very symmetrical. From October to January, the market dropped just about $1.50 per bushel, which is $7,500. And since May through the middle of June, the market has come down and dropped $7,500. What's interesting here is the fact that we are setting right at the 786 retracement within about 3 or 4 cents of that number of $5.92 per bushel in wheat. So this offers a very low risk buying opportunity in this area right here. You wouldn't have to risk more than about 10 cents if you wanted to venture in to the wheat market at this particular time. The the long-term chart on this, wheat and corn are still much higher than they were, many years ago, 5-6 years ago. But in the last, 4 or 5 months, they've been in really strong downtrends. That could change very easily, as you know. A lot of this is weather-related that Rich will talk about when he comes on at the half hour because, they were expecting a total amount of rainfall in Iowa just to catch up of around, I think it was 9 inches of rain, and over a weekend they got 12 inches, so they got a little too much rain. So that's usually what's happened. It's either too much rain, too much sun, or not enough of either the one. So that's why it's so exciting to trade these, because there's always something every day that changes, and believe me, we need the food supply, folks. That's something that we really do need. We can get by without oil. We could stay home or we could walk or carpool and stuff like that, but food is something that you just cannot substitute. So you've got to be really, really watching these markets for potentials if we do have a crop failure somewhere in here. If we ever had a major crop failure in the western United States, the upper Americas, North America, you would be looking at a real devastating situation where thousands and thousands of people across the world would die without some of our food. If the price of beef gets any higher, I guess I'll have to try to be a vegetarian, but that will never happen because I like beef too much. However, there have been 4 cases of mad cow disease deaths reported here in the United States recently, but these folks were from the Middle East, and evidently they brought it with them, supposedly. Now, Rich knows more about that than I do, but that's a very, very bad thing, that mad cow disease, especially if you're a cow. It's just not a very good thing. So we got to take a break here with the Dow down 19, S&P unchanged, NASDAQ down a bit.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Okay, we're back, folks, and I'm going to switch gears from the edible commodities to the unedible commodities. And we'll start out with crude oil. I've posted in the daily chart over the last several weeks here, and you'll see that crude oil yesterday during the Fed announcement, actually it was actually today, it was actually today, it pulled down and made a 382 retracement down at the $105.20 per barrel level. And now we're trading a little above that right now at the 106 and change. So whether this 382 will be the low or not, but the fact that the market is very, very bullish because we've got such strong move up. We've made a big ABCD correction. We've had a minor three-day correction so far here in crude oil. And as you know, in the news, it's always about Iran and Iraq and Syria and, Jordan and all the other places where there's trouble. But that's been going on for 2,000 years. I don't think they're going to make any changes in that without, something major happening. However, if you take a look at the long-term chart of crude oil, I'm going back now several years. We're going to look at it on a weekly basis. You'll see that we are just setting up here at this 786 retracement at the 107.50 level. And if we can break above the 108.50, that would be above the 786 of the high we made back last August. So it's almost a year, but 9 months. That if we break above that, it's going to be very, very powerful move to the upside, which could easily take crude to the 118 to 120 per barrel level. At that level, you are making a 786 retracement of the high from 144 per barrel way back in 2008 to the low we made in 2009 at $31 a barrel. That would be a 786 retracement of that, and that would be where I would expect resistance if we clear this 108.50, 109 per barrel. I mean, all it takes is one gunshot or a shot across the bow of some boat somewhere out in the Gulf. You'll see a move like that most probably. Or if a politician happens to open his mouth the wrong way and upset the apple cart. And that doesn't mean necessarily our politicians. It could be politicians from any country, Russia, Jerusalem, anywhere, Israel. It could be any place. So we don't know. But that's how they move these things around, and we'll see what happens. But this is a long-term bullish chart in crude oil. On the second alternative is if this is the high at the 107.50 level, you're going to see a quick break that'll be far more than just a couple of dollars. But right now it has no indication that it wants to break very much. It's taken 3 days just to back off $2 per barrel, and that is not very much of a sell-off. But if it starts to move and you want to watch it to move with a lot of gusto, like a couple of dollars in one day, then you would have something that you could say, yes, this thing is getting ready, to move on way up to the 118 level, and potentially even 120. That's what it looks like from the charting spot that I'm watching at this particular time, and we'll see what's happening. We still have gold trading above $1,300 per ounce, and we still have the XAU is still stopping right at the 61% retracement of where we were just the other day. And I want to spend just a second here before Rich comes on so we can discuss the U.S. dollar. We'll do that by using the euro, and I want to put that chart up so you can see where we are. We've had a pretty good rally here in the euro. I don't think it's going to last very long because we came down so hard, and we went below the 786 retracement of the lows we made several months ago, and that tells us that this longer-term chart in the euro is still very, very weak, and we will take a look at it. You'll see here that it's still heading to the downside, even though we are having a little bit of a relief rally today. So it looks very interesting. If you want to see a commodity, or a cross rate that is actually looking very, very bullish, and it could be within a couple hundred points of its top, would be the British pound, because the pound has been by far the strongest of any of the European currencies. It's really done a very, very good job, and we've taken out the highs of the last several months up at this 170 and change level, and there's some targets in the British pound that take you up to the 172, 173 level, where it's going to run in the very strong resistance. Okay, we still got the Dow down about 26, S&P down 2.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, we're back, and we've got a caller from Atlanta, Georgia. Charlie, are you there?
Yes, how are you, Larry?
Very good. What can I do for you? Let me guess, price line.
You guessed right, but I want to bring something out first.
Sure.
For an Italian who has challenging moments with technology, I typed your name on YouTube. I couldn't believe the amount of knowledge that's sitting out there. I mean, there's Larry Pesavento for Bonacci's, and I'm going through them and trying to get an education. After 30 years, maybe I can figure this out.
Well, the thing is, you might catch one of those YouTube things are true, but most of them I'm a little skeptical about it because I don't trust the internet very much. But I know there's quite a few YouTube things and other things out there. But I've been around a long time. And that's part of the reason, just by longevity.
By the way, yours probability of success series is incredible.
Oh,
I'm telling you, it is wonderful. I love it. I mean, I really, yes.
I'd improve it 100% if I'd quit trading stock indices. What can I do for you, Charlie?
I'm looking at a wedge on Priceline that you said was going to be 12.18 to 0.382, and it's climbing right up there, and it's right at that wedge, and it's like right under the 100-day moving average. It's right under in the 9-day moving average, and I'm wondering, does it look like it's ready to break down, or does it look like it's going to surprise and move up?
Charlie, I should call you. You've nailed this stock right from the top. So the way I look at it right now, just looking at it, you've made a higher high than yesterday, and you're trading below yesterday's close. So the market has a downward bias, And all you have to do is if it gets above the 12.25 level, I would think you'd be wrong. But at this level, you've got something to hold your hat on. It trades in, good swings. So as long as it doesn't take out the high of the day, it looks like a short to me.
Great. Then
Okay.
I will continue with your suggestions. And thanks for the help.
Hey, thanks for calling in.
Mm-hmm.
Always
Bye.
like talking to you.
Same here.
Okay.
Bye.
All right. Now, without further ado, we'd like to welcome Rich Anderson of Anderson Capital Management. Rich, are you on the line?
Yes, Larry, how are you doing?
Well, I'm above ground, buddy. I still see grass at the green side, and that's what you're supposed to be doing at my age, I guess.
That's for sure. You have been around a long time. He wasn't joking about that.
Rich, I knew you when you were 19, so stop that. You're getting up there, too.
I know.
When we stop and talk, Rich, all the people that we met through the years, oh, my God, it's been one heck of a journey, hasn't it?
Oh, it's unreal.
Yeah.
It's unreal, and yet you're still seeing something new every day.
This is for sure. Whoever thought that we would see hogs at 127 or something like that? Let's start out with the hog market. What's happening there, Rich?
Well, the 4th of July demand, and people, it's a holiday, so they're less sensitive to the price at the retail counter. In order to get the meat into the grocery store, they've got to have that purchases done by Wednesday, Thursday of next week. So that should put a top into the cash market by then. There was a plant back east, I think in North Carolina, had a little ammonia leak and kills 25,000, 30,000 head. So that helped the pork cutout price yesterday, and it's up a little bit more tomorrow or today, and possibly some more into early next week. But by Tuesday, Wednesday, I would think it's fully priced. And the July board is still a $5-6 premium, and that's pretty heavy, knowing that the demand for pork is going to peak sometime mid next week for the 4th of July holiday. The market was down big on the ideas that they've got a PED vaccine, and then today it's up big on, well, maybe it won't have that much impact. I mean, feeder cattle are down a limit yesterday, Larry, on one big trader kind of getting out of some of his positions. I mean, they've had almost a vertical move up. And today, feeder cattle are limit up.
Wow.
It's just
it's like the old days.
Unreal. Yesterday, the cattle were selling off big. You had August cattle as an example, got all the way down to 44.02, and today they've made new highs at 48.02. What happened yesterday is when they were close to the bottom, one of the major packers came out and paid $148, which is $2 cheaper than a week ago. But he paid $148 for 6,000 head of cattle to be delivered on July 6th. Well, that's 2-3 weeks forward. And typically, after, just like the hogs, after Wednesday, Thursday of next week, you should start to see prices start to ease up. I think there'll be decent resistance at the retail counter. And, when markets go limit down and limit up, you've seen this before in other markets, in silver and gold and soybeans. That's not a sign of a bottom. That's a sign that we're getting close to a top.
Yeah, that's for sure. You get nervous people on both sides. Rich, tell me a little bit about what you know about this mad cow disease. My good friend Bert Doman from Wellington Capital, he became a vegetarian 8 years ago because he was so afraid of the mad cow disease. And you were telling me the other day that a couple people here in the United States have actually died from it.
Right, but the ones that were reported were down in Texas, and in each case, the people had extensive travel in the Middle East, where it's very easy to catch because they've had that problem for years.
Oh, okay.
So they just discounted it. It became a non-market. Once they were able to say that, well, they came from the Middle East, they discounted it and became a non-market factor.
Wow.
Just no different than the Ukraine and Russia and Crimea. Mm-hmm. And now all of a sudden, Ukraine and Russia, you don't hear anything about it.
Yeah.
And, what's happening in Iraq, who knows? 2 weeks from now, we may not be hearing anything about that either.
Rich, what's the possibility that we could get a rally in corn? I mean, we're sitting here at, $4.45 a bushel in Christmas corn. We've been down as low as 436, making that double bottom. Are there any fundamental factors that you can see that would tell us that we could get other than the seasonalities that we get, do you see anything that could make the corn rally from here? Because, boy, if it gets below 4 something, it doesn't have a bottom down there.
Right. And see, that's the problem. But I'll add one last thing. There is a cattle on feed report on Friday, and a lot of times, the news comes out to change the trend. But on the corn, we must have had 4 to 6 inches of rain here today. Northwestern Iowa this month has had between 10 and 11 inches of rain, so any drought conditions that existed are gone. We have a 8 to 14 day forecast that takes you out, into the beginning of July, and there's no, the weather's benign. There's no major weather. So in 2012, all of a sudden it turned hot and dry, and corn went, from $6 to $8.49, something like that. We don't, hot and dry is a lot different than hot and wet, and we're going to get hotter here going forward. But it's moist, and so if it's hot and wet, it's not going to be an issue. We had pipelines to fill with the 2013 crop, and now that the stocks and pipelines have been refilled, now we're growing this 2014 crop. That the emergence has been good, got it in on time, and if we don't have a crop problem, we're going to be finding hard to find places to put this stuff. I mean, ethanol producers have got almost $1 a bushel margin. That's huge. The thing that really caused this last break in the corn was when China said we had some last week. We talked on Thursday, and I was traveling, so I couldn't talk. But China took some of the imports of dried distiller grain, which are what's left over when you crush the corn for ethanol, and said that they had MIR 162, and therefore they were going to not allow it into the country, so it's sitting there at the ports and not knowing what to do. Well, China has been the big buyer of our dried distiller grains. Without them buying our dried distiller grains, we'll have to feed it in this country, and if we're feeding that in this country, then we'll be feeding less meal, and so that puts pressure on both the corn and the meal. We could have corn this fall if we don't have a crop problem at $3.50 a bushel. The thing with the corn plant is that by the middle of July, its maximum need for moisture starts to taper off. And so if you haven't had a problem by the middle of July, it's awfully hard to hurt the corn very much unless you get some 95-plus degree temperatures during pollination, where it would dry out the pollen and it wouldn't stick, and therefore you wouldn't fill out to the end of the year. But right now, that's the only thing that I can see that could possibly happen. I mean, we got a rally yesterday in Kansas City wheat because Brazil changed their tariff, and we think we'll be able to sell some of that hard red winter wheat into Brazil. But we rallied up too much, and then we're overpriced versus the world market. And then, of course, other people start to sell it.
Yeah.
The beans are a different story. Their critical growing season is in August, and so if they all of a sudden turned hot and by August we'd be dry, then there could maybe be a story there. But if there isn't a story for hot and dry in August, beans could be $9 in the fall.
Well, they used to trade at $4.50 when we, $3.50 and $4.50 when we traded with them, and they had a pretty good break here. Now we've held this level for the month of June around $12 a bushel, and we're having a little bit of a rally these last couple of days. So if you feel that if it goes below $12 a bushel, we could be easily looking at $9.
Well, during October.
Yeah.
We've got, 24 vessels coming to the United States from Brazil because old crop beans, which would be the July, August, and September, there's a real tightness. We actually sold 5 million bushels of beans yesterday, but it can't be that tight because the July, November beans, a week and a half ago was $2.77. July was a $2.77 premium to November. And today, as I look at the board right now, we're $94, 95.
Mm-hmm.
So July beans have lost 80 plus cents a premium. and that's because these vessels are coming to the U.S. from Brazil. But we need those beans to get us through new crop. But there comes a point when, well, I'll just wait another 4 weeks and buy the new crop beans because they're, still $2, almost $2 cheaper, and then, there's only so much demand, and Brazil's got a good crop, Argentina's got a good crop, and then the world's awash in soybeans, and then it becomes a currency, trade and tariffs that'll affect prices. But there's some downside on some of this stuff if we don't get weather. And right now the forecasts going out 14 days don't show anything that would be of any even minor concern.
Well, it's certainly a lot different than last year when we were looking at some really dire growing conditions, isn't it?
Yep, and yet we grew a heck of a crop. We do have the supply and demand report on June 30th, and maybe they'll cut last year's production, which, those supply and demand reports last year in March and in June, they threw us curveballs and made the markets jump like crazy. So, the USDA could come out with some kind of surprise in the June 30th report in either corn or beans, but short of that, it's not very exciting. The key thing is that Janet Yellen yesterday said that, well, we don't really have any inflation, even though we're at their 2016 benchmarks for unemployment and inflation probably when we get these Friday numbers, and they keep moving the goalposts. But at some point, they're going to notice that, things are getting kind of high because they're still pumping money in.
That's for sure. Boy, we really got game going in gold today, Rich. It's up $37. Do you think this is a valid breakout?
Well, that's Janet Yellen's speech yesterday.
Yeah, well, but it backed off a little bit from there. It actually sold off during the speech, and then it took off, I guess, afterwards. But boy,
right.
we're really
realized that, hey, there's not any tapering. They taper such modest amounts it doesn't matter. It just doesn't matter. Basically, after she talked yesterday, the asset allocators said, "Hey, it's risk on. The sky's the limit until they decide that this inflation targets do mean something." But there's probably a pretty good short position in the gold, and I think that's getting chased out today.
Well, we'll be able to tell that by looking at the open interest tomorrow, won't we? Be checking it out, and if we have a drop in the open interest, we'll see that was short covering. But if you see open interest increase tomorrow,
that is a different story.
That's a different story. You're going to be having some serious buying. But, Rich, if you go back over the last 6 months, this is the strongest day we've had in gold, period.
Oh, I know.
We're up $37. This is a huge breakout, and makes me quite happy. But I really think that it looks like we're getting ready to have a substantial move coming off that bottom that we made at 1240.
Well, the gold and silver didn't really react when the energies were running up.
Hey, Rich,
last week.
we got to pay some bills here. Could you stay with us?
Sure. Nothing but time.
Commercial. Thank you.
All right.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN. Now, back to the Futures Hour.
Well, we're back with Rich Anderson. Rich, I have a funny story. I was talking to Mark Douglas yesterday right during the speech with Janet Yellen, you know.
Right.
And when she was finishing up, the senator said, "I want to congratulate you on a stellar job." Mark said, "Hit the bid button." Sell, sell, sell. He said, because, when they start making accolades like that, it's usually a sign that the party's almost over. But I thought that was rather funny that he came up with that comment at the time that the senator said that. But that's probably, quite true, I would think.
The other thing that's, her speech, got everybody going with risk on, all these asset allocators, whether they be stock or, gold and silver. And, option expirations a week from today, roughly, it's seven days, so it's basically a week from today. And so all the gamma guys, the guys that are short delta, as the market goes up to every 10 cents, they got to buy some more futures, and that just snowballs on itself. And then it gets about so high, and they've covered everything they need to cover, and then you'll just see the market stop, and then it starts to work back down, and all these guys that had to buy so many contracts against their short options now start selling so many contracts against their short options. And so we'll probably see a little bit more volatility here in the next 7 days.
Well, I would hope so, because, for about 7 or 8 days there, we had about a 10-point range in the S&P. At least we're seeing, 20 and 25-point ranges, which is what we really like to see, for swing trading. That's for sure. Rich, if you had to pick one trade here for the next couple of weeks, flat out, not a spread or anything, but what would the folks that were listening to us, what would you have them look for?
I'd be looking at selling those new crop beans, November beans.
At somewhere around the 1250 level in that ballpark?
If they could get to 1250, that would be, that would be ideal. They're 1222 right now. The high last week was 1232 and a half. I'd say 1252 would be a great price. And if they fall through the $12 range, it's kind of open door. A little bit of support is 1168 or so, and she'll just be headed the other way. We need either a surprise in the June 30th supply and demand report, or some kind of a weather surprise. And soybeans are an August weather market; they're not a July weather market. So, not likely to get it from the weather front. Not likely to get it. Currency relationships in Brazil's real. And they could change the tariffs down, the tax that they're charging the farmers to export beans, and that would actually be a negative, not a positive. So, it's going to have to be a surprise in the supply and demand report. That's what it's going to take. I just don't see anything that's going to be that big. So any rally towards that 1250 or so, any producer I know, I'm certainly encouraging them to sell, and I'm selling it as a spec on rallies.
Okay, that's great. I want to thank you for sharing your time with us, Rich, because I know it's very valuable, and it's really fun to hear the fundamentals that are going on, because no one knows it better than you. So maybe we'll have you on after the June 30th crop report, and we'll get an idea of maybe some of the supply-demand things that might fit into the technical picture.
All right, sounds great. You have a great day.
You too, Rich. Thanks for calling in.
Bye.
Yeah. You bet. That was Rich Anderson of Anderson Capital Management. We got the gold still moving. It's moved another $5 since we last talked. It was trading at $13.09. Now we're trading at the $13.15 level. This is the strongest. We're up $41 in gold, folks. That's a big move. That's $4,000. Live every day in an attitude of gratitude, and may God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.